Going to give up on the idea that we need to work towards building an alternative currency so that we can trade with other countries. I don't need to remain subordinate to the dollar.
During the call, the Indian Prime Minister and President Lula discussed ways to deepen their strategic partnership, including trade, technology, energy, defense, agriculture, health, and people-to-people.
New tariffs from President Trump are increasing tensions with two U.S. trade partners. As of today, 50% tariffs are officially in effect for Brazil. As we just discussed, the president signed an executive order also increasing tariffs on India by 25%.
In 1944, the U.S. dollar emerged as the dominant global currency. For over 80 years, it has been the backbone of international trade, the lever behind American sanctions, and the centerpiece of U.S. economic power. But 2025 is shaping up to be a turning point. Recently, former President Trump threatened 100% tariffs on some of the fastest-growing economies, demanding that they stop what he called a war on the U.S. dollar. He made it clear, it's an attack on the dollar, and we're not going to let anybody attack the dollar. Now, these aren't minor economies. The BRICS nations, Brazil, Russia, India, China, South Africa, and several others, collectively represent roughly 56% of the world's population and nearly half of global GDP. And two of these nations, India and Brazil, are now facing tariffs up to 50% on their exports to the US, totaling billions of dollars annually. The response? They are not standing still. BRICS is matching tariffs, redirecting trade to other markets, and deepening cooperation within the bloc. Leaders from India and Brazil are discussing partnerships across trade, technology, energy, defense, agriculture, and even people-to-people connections. BRICS is accelerating a multi-year strategy to reduce reliance on the US dollar. They're increasingly trading in local currencies, building alternative payment networks, and even exploring a shared BRICS currency for cross-border trade. If successful, the dollar's dominance, which has already declined from over 70% of global reserves 20 years ago to about 58% today, could fall even faster. The implications for the US are significant: higher borrowing costs, weaker sanction power, and a potential reshaping of the global economic order. But the story doesn't stop there. For the crypto markets, this is potentially transformative. With global giants like BRICS exploring alternatives to the dollar, technology is suddenly front and center. Centralized fiat systems are under pressure, and decentralized networks could offer solutions for cross-border payments, stablecoins, and tokenized assets. Crypto, particularly blockchain-based stablecoins, could increasingly serve as bridges for international trade outside the traditional dollar system. Let's break down why BRICS matters. These are emerging economies, countries transitioning from commodity-dependent or industrially limited markets to diversified, globally connected economies. Brazil is moving from commodities to industry and services. Russia remains resource-rich but seeks broader industrial diversification. India is rapidly evolving into a tech and manufacturing hub. China has become the factory of the world, while lifting millions into a growing middle class. South Africa has industrialized significantly, though inequality and unemployment remain challenges. BRICS has grown substantially. In 2009, it was just five countries. By 2024, 4 more joined, and 2025 saw Indonesia officially added, with 9 more countries applying to join. That makes BRICS larger than the G7, representing more people and nearly half of the world's GDP. The move away from the dollar isn't just theoretical. Between 2021 and 2024, trade amongst BRICS nations increased by over $700 billion, with China overtaking the US dollar in overseas transactions for the first time. Southeast Asia's largest lender, DBS, reported a 30% year-over-year increase in yuan settlement flows, especially for trade with Latin America and the Middle East. This is de-dollarization in reverse, and it's accelerating. For example, in Brazil, Chinese EV maker BYD has replaced US manufacturers like Ford on factory floors, conducting transactions in yuan instead of dollars. Every transaction bypassing the dollar reduces its global influence, demonstrates a growing real-world adoption of alternative currencies. India and Brazil are feeling the impact of tariffs and are fighting back, not just through trade retaliation, but by moving closer into BRICS integration, aligning supply chains with fellow members, and reducing reliance on dollar-denominated payments. India, for instance, has paused purchases of US-made weapons following a 50% export tariff. Now let's tie this to crypto and blockchain. As BRICS members pursue alternative payment systems, blockchain emerges as a natural solution. Decentralized ledgers allow cross-border payments without dollar intermediaries, enabling settlements in yuan, rupees, or other currencies with near-instant finality and reduced transaction costs. Stablecoins like USDT, USDC, or even a future BRICS-backed stablecoin could play a pivotal role in this evolving ecosystem. The implications for global crypto markets are massive. Increased adoption of stablecoins for international trade, potential surge in cross-border blockchain payment networks, growing demand for tokenized assets as countries experiment with digital alternatives to traditional currencies. Stronger global case for cryptocurrencies as hedge instruments against dollar volatility. Back to the economic impact, the immediate U.S. reaction to tariffs on BRICS exports could cost American consumers and businesses up to $56 billion annually. Exports to BRICS nations represent billions of dollars in goods, from aircraft to tech, potentially lost if retaliation escalates. Commodities controlled by BRICS, such as rare earth metals and oil, add strategic weight to these geopolitical moves. Long-term, if BRICS transitions towards trading in yuan, rubles, rupees, or shared currency, the global demand for US dollars will decrease. This could push US interest rates higher, affect borrowing costs, and reduce the effectiveness of US sanctions. Markets are already reacting. Bond yields are volatile, and safe haven assets, gold and Bitcoin, are outperforming. Crypto investors are beginning to see real demand for decentralized financial solutions as traditional dollar mechanisms come under pressure. For individual investors, this raises critical questions. How do we protect savings, diversify portfolios, and leverage blockchain innovation in a world where the dollar is no longer uncontested? Strategies include diversifying into crypto assets and stablecoins that serve as cross-border payment tools, monitoring emerging payment networks and tokenized platforms used by international trade blocs, allocating investments to commodities and blockchain-enabled financial products that could benefit from dollar displacement. Ultimately, this is a story of global adaptation. The dollar has long been dominant, but the world is shifting. As BRICS grows, alternative payment systems and blockchain adoption accelerate, creating opportunities and risks for crypto, global trade, and U.S. economic influence. As for me, my approach is cautious but proactive. I stay invested and diversified. Bitcoin, blockchain projects, traditional assets, and even some exposure to emerging market trends. The goal is to position for a world in transition, where crypto could play a central role in cross-border commerce and financial sovereignty. This is Crypto Compilations, where we dive deep into the intersection of macroeconomics, geopolitics, and crypto. I want to hear your thoughts. How do you think BRICS moves will impact the US dollar, crypto markets, and blockchain adoption? Smash the like button if this made sense, subscribe for more deep dives, and stay tuned as we track how global currency shifts are shaping the future of money.